we begin with a double dose of earnings. CSX, of course, a read on the economy. Las Vegas Sands, a read on consumer-facing businesses. Both are on the move in the after-hour session. We've got full team coverage standing by to break down both of these reports. Let's kick things off with CSX touching after-hours highs with the call now underway. Let's get to Frank Holland with the details. Frank.
Hey there, Melissa. Shares of CSX up more than 1.5% after reporting revenues in line and a 6-cent beat on EPS. But the biggest headline, the East Coast Rail pulling full-year EPS guidance, something we've seen from a number of other companies and one of its competitors, Union Pacific. On that call, CEO Jim Foote says production and demand was just simply too hard to forecast in this COVID-19 environment. Also during the call, CFO Kevin Boone said the company recently raised $500 million in debt, and despite pulling guidance, the company believes it is in position for a potential recovery and is maintaining a strong cash reserve.
Our liquidity position is extremely strong, with nearly $2.5 billion of cash and short-term investments at the end of March. This represents multiples of what we would consider normal targeted cash levels.
All right, cash may be strong, but volumes were weaker year over year to start Q2. The COVID-19 impact on CSX is already being seen in the 3 weeks since the first quarter ended, with double-digit declines each week. Now, on the other side, CEO Jim Foote, he's really praised the railroaders for their ability to work during these conditions and keep critical goods flowing on the rail. The company also set a new efficiency metric for the first quarter, but I think right now, Melissa, it's all eyes on Q2. Back over to you.
All right, Frank. Thank you, Frank Holland. Guy, I will start off with you. How long have we been doing this show? A long time.
13 years, actually longer than that.
Longer than that, longer than that. Have we ever started a show with CSX earnings? No.
Not that I can recall, Melissa.
But you know why? You know why they're so.
My age, I don't remember what happened yesterday.
Well, why they're so interesting this time around is what they're going to be saying about the economy and how they weathered this past quarter and what they have in common with a lot of the other railroads going into this particularly tough environment is that they've already cut costs. They've cut labor. They've gone down on fuel costs. They've gotten lean ahead of the pandemic.
Yeah, and they've actually, you look at all the railroads, CSX specifically, but they're running these railroads so more efficiently than they were even 3 or 4 years ago. I mean, Steve Grasso could probably speak to this, but in a lot of ways, these railroads have become technology plays, believe it or not. So the efficiencies you're seeing is all on the back of the technology that they've spent a lot of money implementing. In terms of the stock, understanding that all these companies are going to pull guidance, out of the major railroad, in terms of multiple, it's probably the cheapest. I think it still has room to the upside, but if you want to play stock market here, if it were to get to 64, that's a sort of a 50% retracement of the recent high and obviously that trough low we saw a few weeks ago. So although I think it was a really wonderful quarter despite what's going on, understanding that they're pulling guidance, I think if it gets to 64, you pull the ripcord and live to fight another day, Melms.
Operating margins were the best on record for the company. Expenses were down 7% year on year. Steve Grasso, if you are to believe that some sort of recovery is around the corner, is this the first place you want to be? One of the first places you want to be? A place you want to be at all?
These places, this segment of the economy, they actually lead, to your point. So they're going to lead the first on the way down. So as you said in the introductory, they already cut. They've already established where this economy was going. So you're going to see your first signs of life in this segment of the economy, in the transportation segment. I would go with CSX if I was forced to choose, but I'd rather be in UPS. UPS is great at shipping bulk. FedEx is not so great. They ship parcels better. But if you're going to see a real leading indicator, you could see it with the rails. But if you want to make some money early, UPS is probably your best transport to buy.
I like Grasso pulling out the self-would you rather 5 minutes into the show. That's strong, BK. Where do you go here?
Yeah, so I mean, I think CXS is interesting, not just because it's going to be a leading indicator, but you're going to get a read on what inventories are like and how when inventories normalize, right? We know we had this huge surge as people started to hoard goods into it, but now inventories are normalizing. So you watch CSX. You watch CSX for a couple different reasons. They have intermodal, which means you're going to kind of get a read on what's going on with the trucking sector as well as the shipping sector. Plus, they have that export coal sector, which is really important to get a read on what the global economy is doing. So, no surprise they pulled guidance. I think every CEO in the world should do that. but I think this is the place you watch. You see CSX leading the market, that's going to make you more bullish.
Intermodal was weak, no surprise. Automotive was weak, no surprise, Tim. So how are you feeling about CSX, and if this is any sort of a read-through of what we're seeing in the broader economy?
Well, to echo some of the sentiments, the most important things for me investing in shipping companies right now are finding the best balance sheets and the best cost efficiencies, which we've talked about with CSX, puts you in a pretty good spot. In terms of the relative performance to the market, you can make an argument that actually a couple of these shippers have really underperformed this snapback in the markets. Remember, CSX was an $80 stock going into this, traded all the way down around $47 before snapping back. Valuation on a trailing basis looks pretty attractive. Question is, what are they going to do going forward? I do think for investors that are looking for those stocks that they say out 1 to 2 years, I'm a medium to long-term investor. The best of breed rails are certainly making sense, and I think CSX is one of those names.
Open-ended question, Guy. Favorite transport right here, right now?
Uh-oh. Open-ended question, favorite. Well, as you know, Melissa Lee, I actually spent a day working at UPS, so I would echo some of Steve Grasso's sentiment, but I don't know. I mean, I'm not looking. I don't think the shippers are really where you want to be. They've all had pretty significant runs off these lows we made, and I still think the market probably stops here at the 2,800 level. So if you're forcing me to choose, which you did, UPS, but I say that
she did.
With a serious
Actually, I
grain of
asked you
salt.
an open-ended question. I didn't force you to do anything, but if you want to choose, you choose, and that's exactly what you did.